Coinbase is winding down operations in Japan. Tether trading is suspended in Canada, and Binance gains regulatory approval in another country in Europe. That and more on the CoinSense Crypto Wire, your regular update of news and events regarding Bitcoin, Ethereum, the other digital assets, and the greater global geopolitical scene at large. Today is January 11th, 2023. Coinbase is closing down a majority of its operations in Japan and laying off staff located there. According to the Coinbase Vice President for Business Development, the company is going through a transition period, and the shutdown will take place after Coinbase finalizes its discussions with the Japanese Financial Services Agency. This news came one day after the exchange announced laying off 950 employees globally, which is about 20% of Coinbase's global workforce. Crypto.com, a global cryptocurrency exchange, will delist the Tether-issued stablecoin USDT and all USDT trading pairs on its platform for residents in Canada on January 31st due to restrictions by the Ontario Securities Commission. The platform will also be converting remaining USDT user deposits automatically to Circle-issued USDC. The move comes after the Canadian Securities Administrators announced plans to strengthen oversight of crypto trading platforms and study the regulatory implications of stablecoins in the capital markets as part of its 2022 to 2025 business plan. Binance has been granted approval by Sweden's Financial Supervisory Authority, making Sweden the seventh European country in which Binance is authorized to operate. This registration allows Swedish residents to buy and sell crypto in euros, access Binance's staking service, and use the exchange's Visa card, among other services. The registration in Sweden follows Binance's registration in France, Italy, Lithuania, Spain, Cyprus, and Poland. The CME's Bitcoin futures have started drawing a premium over the spot market price for the first time since the FTX collapse. This is typically considered an indication that institutional investors are less cautious about Bitcoin. Netherlands-based cryptocurrency exchange Bitvavo rejected Digital Currency Group's proposal to repay only 70% of its debt, stating that Digital Currency Group has sufficient funds to make full repayment. Bitvavo has over $300 million locked with Digital Currency Group and uses their service to offer off-chain staking services to its clients. However, clients of Bitvavo are not impacted by this situation, as they can withdraw their digital assets anytime as the exchange assumed the risk on their behalf. In Argentina, the Ministry of Economy has proposed a new bill aimed at addressing money laundering and encourages its citizens to reveal their crypto holdings by incentivizing them with lowered tax rates. The bill would also force domestic and foreign holdings to be deposited into banks approved in Argentina or into foreign banks that are regulated by that jurisdiction's central bank or securities commission. Additionally, the bill would encourage the citizens of Argentina to declare any holdings of financial assets that are subject to capital gains, including fiat currencies, stocks, shares, and real estate. Creditors of the bankrupt crypto lender BlockFi are seeking to keep their personal details secret in court filings. They argue that if their names are revealed as part of the bankruptcy proceedings, they will be at risk of hacks or identity theft. The motion to publish the creditor list will be heard on January 17th. The bankrupt crypto lender Voyager Digital has received initial court approval for the proposed sale of its assets to Binance.US in a deal worth a little over $1 billion. However, the deal is also being examined by the Committee on Foreign Investment in the United States for any potential national security concerns. But despite these issues, the Voyager Official Committee of Unsecured Creditors has come out in support of the transaction as it would help in greater recoveries for creditors. You've just listened to the CoinSense Crypto Wire for January 11th, 2023, brought to you by CoinSense.com, a free-to-use sentiment analysis website offering unique insights into the cryptocurrency markets.